Hello and welcome back to WealthWise Network. In this episode, we are going to take you through what investors need to know as Google stock soars after Alphabet scored a massive legal victory on Wednesday. Shares of Alphabet Inc., Nasdaq GOOGL, surged 8.3% in morning trading today after a landmark U.S. federal court ruling in a long-standing antitrust case provided a decisive victory for the tech giant. The decision, widely seen as a turning point, removed the looming threat of a company breakup and sent ripples across the entire tech sector. The publishers argued that Google had violated their rights by using their content to train the company's large language model. The court rejected the Department of Justice's DOJ proposal to force Alphabet to divest its Chrome browser and Android mobile operating system, two pillars of its global dominance in internet services. Instead, the ruling imposes only limited restrictions, such as barring certain exclusive search deals and requiring modest data sharing with competitors. Investors welcomed the outcome, describing it as a best-case scenario. Massive win was the phrase echoed across trading desks as Alphabet's stock rallied past $228.95, setting a new 52-week high. Alphabet is now up 20.9% a year. The government folds like a cheap suit, wrote Wedbush analysts in a sharply worded post-ruling note, calling the result broadly favorable for Google. The firm raised its price target from $225 to $245. Scott Devitt, Wedbush's head of internet equity research, cited three main reasons for continued bullishness. These include the worst-case DOJ remedy has been averted, competitive pressures from AI challengers like OpenAI and Perplexity are fading, and Google is repositioning the business as a winner in the AI space, with robust cloud growth and strong demand. Don Ives, managing director at Wedbush, echoed the sentiment on X, formerly Twitter. Huge win for Google in DOJ court ruling and Apple massive search deal survives. Big overhang removed from both Google and Apple. Devitt, a highly rated 5-star analyst on TypeRanks with a 53% success rate and plus 12.7% average return per rating, gives added credibility to Wedbush's bullish stance. Following the ruling, several other major firms also raised their price targets. Needham reiterated a buy rating and raised their price target from $220 to $260. Oppenheimer lifted their target from $235 to $270, calling the outcome the best-case scenario. RBC Capital Markets boosted their target from $220 to $260, stating the ruling is benign and unlocks valuation expansion. The rally was not just limited to Alphabet. Other major tech players, including Apple and Meta platforms, also saw gains amid the broader positive regulatory sentiment. Gene Munster, managing partner at Deepwater Asset Management, told CNBC the ruling reverberates well beyond Google. Munster said, "This is good news, of course, because the regulatory bark is much bigger than the bite. They're more lenient. That's positive. It's positive for Apple, positive for Google, but also positive for Meta." Munster specifically emphasized Apple's lucrative search deal with Google, worth an estimated $20 billion annually, as a major win. "I think Apple will still get $20 billion a year from the Google search deal," Munster said. Interestingly, he also highlighted Perplexity as a secondary beneficiary from the ruling's mandated data sharing, suggesting it could be a strategic acquisition target for Apple. The stock's sharp move on Wednesday follows a modest 2.1% decline just a day earlier when Alphabet was caught in a broader tech sector pullback, fueled by uncertainty over U.S. trade tariffs. That volatility marked one of the few 5% plus moves for the stock in the past year, underscoring the significance of today's surge. Before this, Alphabet had been riding a strong 5-month winning streak. Its relative strength index RSI had neared 75, typically a signal of overbought conditions, leading some to predict a correction. However, the Wednesday's regulatory clarity has reignited optimism and muted those concerns. Alphabet's 5-year return paints a compelling picture. A $1,000 investment made 5 years ago would now be worth approximately $2,810, reflecting the company's consistent dominance despite mounting scrutiny. Still, challenges remain. As part of the court's decision, Google must now avoid exclusive agreements and open portions of its search index to competitors, a development that may empower rivals in the long run. Apple's search deal alone accounts for roughly 4% to 6% of Alphabet's profits, making any disruption potentially impactful. Alphabet has emerged from one of its most threatening legal challenges, mostly unscathed, avoiding a structural breakup while keeping its most valuable partnerships intact. While some competitive concessions were mandated, the ruling is widely seen as removing a significant overhang, with Wall Street recalibrating price targets higher and analysts praising the company's positioning in AI and cloud. Today's market reaction appears justified. As Gene Munster summed it up, click-through rates with AI overviews and AI mode are basically at the same level that search was at a couple of years ago, which is really impressive. So, is now the time to buy Google? Well, that depends. Alphabet has broken out of a multi-month range, and today's move is one of the rare 5% plus spikes we've seen this year, indicating how meaningful the market considers this news. Plus, with the antitrust overhang lifted and momentum in AI and cloud, the long-term story looks stronger than ever. But remember, Alphabet is still required to open parts of its search index, which could fuel competition down the road. What do you think? Is Alphabet now unstoppable, or are new risks just beginning to emerge in the AI age? Let us know in the comments below. If you got value from this breakdown, make sure to hit that like button, subscribe for more weekly tech and market updates, and tap the bell so you don't miss what's next. Thanks for watching, and I will see you in the next episode.